Sharp intraday recovery coming in the market, almost 140 points. You're watching the newsroom. I am Ajaya Sharma. So above the 23,000 once again. Ramesh Mantri is here with us to talk more about markets from WhiteOak. Ramesh, afternoon. Thank you so much for your time. The sharp rally which the market has seen in the last 15 days, your portfolio must have done very well as well. I want to understand, how are you toggling between valuations and earnings growth within your portfolio right now?
Yeah, thank you. Thank you for hosting me on this show. I think, of course, markets are rallied now because there were concerns earlier on election outcomes. I think those concerns are receding. Markets love political stability. And I think the expectation is that you'll have a political stability on this. In terms of earnings growth, this quarter has been a mixed bag for markets because one of the reasons we can see clearly is government spending has been weaker, and that flows through the economy. And we're expecting that post the next week election outcomes, you'll start seeing the flowing through the economy, the government spending coming back, and of course the RBI dividend, which has been a huge dividend, will lead to increased spending by the government. So earnings have been mixed bag. In terms of valuations, I think valuations in small caps are pretty challenging. Small caps as a basket is trading significantly above long-term valuations, and you started seeing some risk and governance issues started emerging in the small cap space and more in the SME space. Mid caps are slightly overvalued, and coming to large caps, that's where the clear. But mid-cap earnings have been very good. That's important perspective to have, that mid-cap earnings have been good. And then coming to large cap, that is clearly where the value lies in the market. So today, as we speak, normally, the risk curve is that, large caps tends to be most expensive and small caps cheaper. Now the risk pyramid is inverted. The highest value lies in the large cap part of the bucket. Now coming to broader sectors, we find so we'll look at sectors in terms of valuation, but before we talk about valuation, it's important to look at fundamentals. So when we look at combined fundamentals and valuation, there are some sectors where fundamentals are very strong, but valuation ask is very high. For example, industrials, capex related, and then smaller industry segments like defense, electronics, manufacturing. The fundamental corporate earning generally has been good, but valuation ask is high. The space where valuations are attractive and fundamentals still remain very strong is financials, particularly banks. So that is where, and you can't have an economy growing at 7% per annum and financials.
Rajiv, no wonder you have a big position out there as far as large cap private banks are concerned. But I want to ask you about one part of the financials that you have represented in your portfolio. This is the insurance name, some of the insurance name that you have. This is also a part of the portfolio in the financial side, but has not done very well. Do you think valuations and earnings, all of them bottomed out over there, and from here on 1 or 2 years things look better?
One, of course, valuations in insurance have corrected quite a lot. And the other one big reason, of course, is that there's a concern that certain adverse regulatory moves will happen in insurance. While one of the talked about things that's going on market is commissions in insurance can move to trade. That will be disruptive for the sector in the short term, just like mutual fund industry moved a few years ago from upfront to trade. But actually, longer term, that makes the industry a lot more sustainable. But I think the big story of underpenetration in insurance remains very large. Apart from investment product, there is a real need for life insurance, health insurance. In fact, the need for life and health insurance is more important than even investments. So it's a far more critical need than even investment. So this industry clearly has a relevance. Penetration level is very low. And I think the tax regime is now becoming more levelized. So everybody has to compete on merit, which will create short-term challenges for insurance industry. But long-term actually is very good for them because they'll actually have to start thinking of what is the real customer value proposition they have to go to the customer for their products. But this is going to be a big industry over a long period.
But unfortunately in India, mutual funds and investment products have become a pull product, but insurance still remains a push product. So that has to change. I want to talk to you about the mid-cap IT names. You have some of the mid-cap IT names, high growth companies, also servicing niche, very high growth niche right now. Are valuations becoming a bit of an issue there, or you're comfortable holding them even at current levels?
See, one, the whole IT sector has had growth challenges last year because of the slowdown. And normally in a slowdown, the history is that large caps do better on growth and mid caps do worse and small caps get killed. But if you see the last few years cycle, actually small cap and mid cap IT on growth have outperformed large caps. The reason is that the today's small and mid caps in IT services are very different from the earlier decades. Today, many of these companies are run by, CEOs who have been part of large companies themselves. Instead of trying to be everything for the customer, which a large cap IT company is, these companies have figured out their niche and are willing to compete in that space with the largest companies. And number three, many times their CEOs tend to be based in US, close to clients, so they're better positioned to give comfort to clients. So many of the small and mid cap IT services companies are outgrowing large caps, very unique. And in that context, we will look at that. Within that, there are very interesting story in IT services now that's playing out in India. Normally, when we talk of IT services, we only talk about people selling to the Western world. But now, because of this tech adoption in India and also the regulatory actions that have been taken on banking space, we think there is clearly a large capex cycle in IT in banking sector. And we in our portfolio own a number of names which are focused on the Indian market, tech for financial services. And we have seen already tech problems with number of banks in India. So Indian market is also now becoming slowly relevant for tech companies.
One last word I want to understand from you before we let you go is, which part of the market do you think is completely unloved and ignored right now and is pricing in all the negative, which may actually start reversing with, say, next 6 months or 1 year time frame?
No, that's the very simple answer, Ajay. That is simply PFSI, private banks. The fundamentals are good, and yet they have become, the meme stocks, right? People forget some of these private banks have great track records over 25 years. And just because they've not done well for a couple of years, that does not mean you can write them off. And these are solid institutions. And you can't have an economy growing at 7% and banks not participating in that. So clearly that is really the ignored part of the market. Valuations are below long-term, averages. Fundamentals are very strong. So this is clearly where you can create a lot of alpha. I'm very confident over longer periods, we'll create a lot of alpha in this space.
That's a very differentiated thought. A large part of the market believe that banks have become pretty over-owned right now. But thanks for your time this afternoon, Ramesh, and we should chat up often from here on. Thank you so much.